Gary Wagner's back. We have a brand new chart. This next. So we're talking all those fun things with Gary Wagner today. U.S. government shutdowns, debt ceiling limit approaching, Janet Yellen. He's with me now. Gary, thanks so much for being with us.
My pleasure as always.
Gary, last week we saw gold dip below the $1,300 mark. Let's start off by speaking about this. What's happening with gold right now?
Well, obviously a major sell-off. Sell stops were hit. But more importantly, the sell-off and the timing of the sell-off is what's most disconcerting to me. The fact that we had the government in the United States in the partial shutdown, and the fact that we had tremendous pressure on gold is significant. Now, one of the underlying factors, of course, was a stronger dollar last week. But even in light of that, the fact that the market sold off with the kind of fundamental news that's out there is very, very disconcerting to gold bulls.
Gary, we're approaching the 11th hour here with the debt limit scheduled for October 17th. We saw this happen back in 2011. Do you see any patterns of how that may have affected gold? I spoke to some analysts earlier before who were telling me that this could really drive prices higher.
Well, obviously we have kind of the opposite reaction that we saw in 2011. In 2011, alarms went off, gold rallied. And what we saw here, I don't know if we want to say it's the boy that cried wolf, but I believe that the underlying tone of the investment community was at first there's no way that they would let the US government run to a point, meaning October 17th, run out of money and not pay their obligations. It's simply unheard of. So many analysts believe that although there's bickering, they'll come up with some sort of 11th hour solution or compromise. And we haven't really seen the same reaction that we saw in 2011.
It has been the opposite, Gary. Now, let's talk Janet Yellen. Before her nomination, people were thinking that if Yellen were to be nominated, that would be good news for gold. We haven't seen it cause gold to rally yet. Does the news take some time to kick in? What do you think is happening here?
Well, there's no doubt. The fact that Yellen was nominated, and I believe will be able to be the first woman Fed chairman, is bullish for gold in the sense that she's considered one of the more dovish members of the board. However, what we noticed was that when the nomination came out, we had a rally in the stock market, but we also had a rally in gold. And in fact, the day that the nomination came out, gold was lower, but over 2/3 of that, if I recall, was directly attributed to dollar strength.
So Gary, we're starting the week off with you. What are the most important factors that you'll be paying attention to when looking at gold this week?
Well, obviously, the most important factor is if a deal is totally reached and if the United States can forego being deadlocked before the October 17th deadline. I mean, all eyes are going to be focused on that.
And how do you think it will play out this week, Gary? Do you think they'll come to a settlement?
You know, if you would have asked me last week before they passed the first deadline, I would have thought some sort of an 11th hour deal would have been reached, honestly. And the reason I believe that is because historically speaking, when I looked back at what happened in 2011, that is how it played out, but that's not the case. And so the problem that we have right now is that we have two elements of the government that really don't like each other, and I'm talking about the Speaker and I'm talking about President Obama. And there is a complex negotiation going on, and I really cannot fathom what would happen if we let it go to the deadline. So that's not something I'm looking at as a possibility. But if you would have asked me a week ago, I would have said the same for the last deadline that we've missed.
Before we get to your insert, what are the key levels you're looking at for gold, Gary?
Well, I mean, the key level that we broke through was 1275. When we broke through that on Friday as the market traded to about 66. There is another level at 1234, but that's a minor level. And my fear is that If in fact this market continues to trade under pressure, it might in fact go to test the lows at around 1181. But 1234 is my next number to watch.
All right, Gary, let's get to your insert.
You know, a lot has happened since our last show. Last show was roughly 2 weeks ago, and 2 weeks ago we talked about the fact that we still saw underlying weakness in the marketplace itself. The market was trading 1330, 1335. It had had a series of tops here, but it was just previous to the last couple of drops we've witnessed in the marketplace itself. My outlook right now is kind of a double-edged sword, and the double-edged sword that I'm talking about is all technical indicators right now are simply pointing to lower pricing in gold. However, we're looking at historical data to forecast future prices. But future prices are always based upon fundamental news. And when the fundamentals shift or change, of course, there is absolutely no Western technical indicator that will be able to predict that change, that shift in fundamental news. And that's the double-edged sword that I'm speaking about. Right now, with the partial government shutdown in play and talks have broken down in the House, they're looking at the Senate. Each day, there's a renewed feeling of hope or a renewed lack of confidence in them solving this dilemma, of course, by the deadline, October 17th. And that is absolutely the wild card. Although technical indicators are pointing towards lower pricing, we could see gold really spike and take off. But as of this point, it has been absolutely lethargic, to say the least. We talked about the fact that we have had these series of lower highs in the market as we went into this really bear fall from 800 down to about $1,200, 1181. We also talked about the fact that we noticed a difference in this last rally when we compared it to previous rallies, not only in the price move that we saw, but the duration of the rally. However, once the marketplace failed to take out this upper level resistance area right in here, we realized that we were looking at a bull run in a continuation of a bear market. The other thing that we talked about and that we noticed was the fact that we had a series of lower lows. So we had the marketplace in terms of the range itself compressing. And what we witnessed last week more than anything else was a clear and utter breakout below that upper level supports. I had originally fixed our lower level support line from these two lows here. We'll go ahead and we'll put the line in. We actually had a period last week in which the market breached and broke below that. I had thought at that point we might see the market really severely sell off, but it was able to recoup. So this is what happened early part of last week. As the market broke back through this upper level of support, we went into a virtual free fall, and this virtual free fall actually took gold well below 1270. And the next technical indicator that I think shows some real signs of weakness is the moving average convergence divergence, the MACD. We do have the beginning or just at the point in which they look like they are about to cross. They have not yet. If we look at the weeklies are going to be lagging just a little bit behind the actual dailies, and they look like they're just about to cross. So that's another very strong technical indicator, I believe, that's pointing towards lower prices. And the last technical indicator I'd like to bring to your attention is our current Elliott wave count. What we basically witnessed was a strong wave 3 down. We had the ABC to form our wave 4, which is our counter wave or our up wave, and now we are in wave 5. That's really the big picture in terms of our current Elliott wave count. Now, when we take that Elliott wave count and blow that up for our daily chart, this last rally can easily be seen or divided as an A, B, C, and we are now into our wave 5. And this is where I have some strong concern that we might see lower pricing. When we looked at this last rally, 1181 up to 1435, and we did a basic fib retracement, our 61% retracement level is 1274. Obviously a very significant level. and obviously breached on Friday's trading. If we are to just simply look at an Elliott wave model, and that model is going to state that wave 5 will have a low below that of wave 3, then we certainly could be in store for lower pricing. Gone ahead and pulled our 3-day chart back up. And even if what we saw was a flat, meaning this is our wave 4, if wave 5 and wave 3 have equal lows, that would take us back down to the 1181. In other words, these intraday lows. If it is a zigzag or a typical correction, that correction actually will go below this particular low that we had at 3, and to me the next logical level to look for would be 1014, and that is a 78% retracement. And the retracement that we're looking at with these larger retracements are retracements from the beginning of the rally right here to the top of the rally right here at around 1920, bottom just at around $700 an ounce. Yes, it is my belief that when we look at the technical indicators right now, we are looking for a continuation of lower pricing. But also, I absolutely believe that that could change or turn on a dime. And that's why I think that it is more important than ever that we offer Chart This viewers bonus content that is timely, because as this market changes, I want to be able to give you information that will reflect that. To view the Kitco Chart This bonus content, simply go to our website, thegoldforecast.com. If you scroll to the bottom of the screen, you will see this copyright with this little C logo to the left of it. Simply go ahead and click that, and that will take you to our bonus content page. Again, Elliott Wave, MACD, and basic trend analysis as it pertains to gold.
Gary, thanks for that. We'll see you next week.
My pleasure to always be with Kitco and our viewers, and I wish you a great week ahead.
And thanks for watching this edition of Chart This. You can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Camboni. Thanks for watching.